Welcome. This is the Financial Apostle Innocent Machabe. Today I'm going to be talking about some taxation issues. As we about to come to the end of the first quarter, you would note that there have been so many changes that came into effect at the 1st of January that caused in some tremors in businesses. But for example, VAT, the due date for payment was, normally it was the 25th, now it was brought back to the 15th of every month. And then also submission of returns, which means for payee, normally we know that it was submitted on the 10th of the month, but now the new tax system is saying that a return should be submitted 5 days before the payment is due, which means for payers, which means it's due on the 5th of every month, then the payment is due by the 10th of every month. For VAT, the return is due, should be submitted by the 10th of every month and payment by the 15th of the month. So which means all these changes, they affect our cash flow planning. Because where you were saying I'm going to be holding this money that I collected from VAT for 25 days, now you can hold on to that money for what? 15 days. Which means if you are not planning your finances, you're managing your finances well, which means you might be struggling to actually remit. Because once you fail to remit the money on the due date, you are bound to be penalized. One important thing that is happening this month of March is that on the 25th of this March, the QPD, quarterly payment date 1, is due, which means we are going to pay 10% of your forecasted profits, income tax. This is corporate, which means the important thing that if you have made your budgets and made your forecast and you're saying okay, this year we are likely to make $100,000 in profits, which means if you work with $100,000, it means our corporate tax rate is 25% plus 3%, which means roughly we are saying that we are targeting to pay $25,000 plus 8 levy to the taxman. So it means 10% of that 25,000 is what you should pay on the 25th of this month. And then how do you reduce, or how do you make sure that you pay the requisite tax, or you don't overpay or underpay? It goes on to how you're spending and how you do your planning. Because if you are spending on items that can be disallowed by the taxman, which means at the end of the year, when they do submit your final return, when you go under audit, they do an assessment, you find that some of the expenses that you claimed, they will be disallowed, which means they will be added back to your taxable income. And if you remember, the taxman allows you to have a variance of plus 10% or minus 10%, which means you should not go over or under by 10%, over by 10%. But if you are, it's actually under by 10%. But if you intend to pay more, then they will be happy that you've brought in more money. But if you say that your forecast, then your forecast is to pay 25,000, then you end up paying 10,000, which means it's more than 10% decline. They want to know why. So it means it's very important that as you should know your cost of sales. Is it something that is in the furtherance of business? Is it something that concerns to the business, or your expenses? For example, you can't. Private expenses cannot be claimed against business expenses, which means these expenses, they will be disallowed and added back to your income. So it's very important that get somebody who is very good in actually doing your tax computation, analyzing your expenses, because it's not just picking anyhow that QPD is due, let's just do figures, throwing figures. That time of just throwing figures is no longer there. As you all know that ZIMRA is very serious about tax compliance. So let's be careful about how we go about calculating our taxable income in this particular system, so that we don't get to be penalized. And remember, every late submission of every return is now attracting a penalty of $30 every day, up to a maximum of 90 days. So this is money you don't want to just throw away by submitting late, any return late. So make sure you are submitting the return late. And also, in your QPD return, remember, probably you might have supplied some goods or services to a particular customer before you had the tax clearance. Remember, there's that withholding tax of 30%, which means this 30% is the money that you can net off, set off against your forecasted taxable income, which means suppose you've got 1,000 that you paid through withholding tax, which means already that money is going to be set off against your taxable income, corporate tax. Like for example, that I give that you are forecast to pay 25,000, already there's 1,000 that has already been withheld by a particular customer. Then they remit that money to Zimra when they do their VAT returns, which means in your account they say that, okay, under income tax there's $1,000 that is showing that you have paid $1,000, which means your balance will be 24,000. Not that you pay 24,000, which means actually your account will be in credit, but you do not just pay money in advance when it's not yet due. So take note, whenever we have somebody is withhold 30%, that is if you don't have a tax clearance, ensure that you get a withholding tax certificate that you will file or that you will submit together with your QPD as a supporting document against the figures that you have supplied on that income tax return. Thank you so much for listening and watching. See you in the next video. If you have not subscribed, don't forget to subscribe. Click on the subscribe button. Thank you.